The top business stories live from the Sky Newsroom. A surprise boost for the UK economy after GDP rose 0.5% in February. As the Chancellor vows, the government will not be complacent. China announces it's raising tariffs on US goods 225% as US and Asia markets slump. And Donald Trump admits there will be transition costs to his trade war. And an industrial revolution that's out of this world. Sky News gets exclusive access to the company testing the possibility of manufacturing materials in space. Very good morning. Welcome to Business Live on this Friday with me, Darren McCaffrey. Well, the UK economy performed better than expected in February, growing by 0.5%. That's according to the Office for National Statistics. Analysts had only predicted a 0.1% increase, so quite a big leap up. The Chancellor's described the figures as encouraging, but struck a cautious tone with the news coming ahead of an expected hit due to global trade war and the volatility of the last week. Well, let's get more on this with our business and economics correspondent, Gurpreet Narwan. We haven't had much good news, Gurpreet, but this is at least some for the UK economy.
Yeah, cherish it while it lasts. The UK economy grew faster than expected in February, expanding by 0.5%, when economists were penciling growth of just 0.1%, and up considerably from the 0% growth posted the previous month. A quick health warning, though, Darren, these are monthly figures. They're prone to revision, and actually we saw January's figures were revised as well, but in this case they were revised up to 0%. And that being said, however, it's clear that the economy was resilient in February across the economy sectors, in manufacturing, in services, in construction. We saw economic growth, even though factories were actually ringing the alarm in February. They were telling us that they were nervous about the Chancellor's tax rises that were coming into force in April. They were nervous about Donald Trump's looming tariffs. They didn't know where that was going to go. And they were worried about what kind of impact that might have on their exports. But it seems that the manufacturing sector has actually held up here, although it's worth saying that some of that increase in production in manufacturing may be factories trying to get orders out the door to beat the imposition of tariffs. And if we look at the trade data that was also released alongside this, that certainly does seem to be the case. However, Donald Trump's tariffs policy has quickly made all of this redundant. We're now in April and these figures are for February. It's undoubted that his 10% tariff on the UK is going to hurt our exporters, particularly in the car industry, for example, where the tariffs are actually higher at 25%. But the biggest pain could be felt from the global slowdown that will happen when China and the US, the world's largest economies, are going at each other in a tit-for-tat trade war. We're a relatively small, open economy, and we are going to feel the impact of that. So some good news here, Darren, but we should enjoy it while it lasts.
Indeed. I suspect it may not last for very long. Gurpreet, for the moment, thank you as always. Well, as we were reflecting there, is this economic growth around to stay, or is it at risk because the world's two major economies have descended into a trade war? Let's speak to Liz Martins, senior UK economist at HSBC. It is interesting, isn't it, Liz, listening to Gurpreet there talk about the facts that this is a monthly snapshot, if you like. I'm old enough to remember when we used to only get GDP figures every quarter. But it is good news, and it's good news because this growth is coming from all quarters at the moment.
Yeah, of course it's good news. We've had a lot of dismal growth numbers out of the UK in recent times, so a better one is always to be welcomed. I would add the same note of caution, though. 2.2% monthly growth in manufacturing, fantastic on the surface, but then you overlay that expectation that we knew in February that tariffs were a risk. Were manufacturers selling more into the US in order to get ahead of this, and therefore will they have to pay that back further down the line? So, I mean, definitely, I think the services bit is to be welcomed. The manufacturing piece of the puzzle might be a bit more temporary.
Well, that's the point. We're looking here at pictures inside a car factory there. And, you know, when you look at car manufacturing, it's going to be in trouble because those tariffs are already now in place of 25%. And for Jaguar Land Rover and others, it's quite difficult because the US is a big market for them.
Absolutely. So first of all, you've got that risk around that market itself, and we don't know what's going to happen. There's a lot of volatility in the announcements, but there's an additional risk, which is that countries which are facing even higher tariffs are going to be looking for alternative markets. So they're going to be looking to sell their own exports cheaply into the UK, and that's the practice of dumping, perhaps. And that's another challenge for the UK's manufacturers, including cars. So absolutely, good news from today's number for February, but lots of headwinds coming up.
Yeah, it's an interesting point that, isn't it, Liz? That in the short term for consumers, actually, this trade war might in theory be good for the UK, but in the long term, if there is dumping, may be bad for British manufacturers. I think the UK is one of the few Western countries that has not imposed tariffs on Chinese electric cars, for example. Let's move on from manufacturing. We can talk about construction, because that's another sector that people have suggested, and not least of all those that work in the construction sector, that actually businesses are really struggling. Some of them have gone bust. That actually trying to achieve that house building target is going to be difficult, given how unhealthy that sector is in many regards. And yet we are seeing growth there. Are people being a bit too negative about the state of the UK's economy?
I think we often like to talk ourselves down a bit, don't we, and focus on the negative bits. And I think, there have been some really encouraging developments from government policy around planning, which eventually should deliver some better news for the construction sector. The other thing that would help, I think, for the construction sector would be for interest rates to come down a bit. And obviously the market has moved to pricing a little bit more in that regard. And the other good news recently, not just for the construction sector, but for everybody, is that energy prices have come down as well. So there is still positive news out there for sure, and we shouldn't dwell too much, I guess, on the negative.
Well, you said that. I'm now going to be a bit more negative, which is that we've been focusing a lot, unsurprisingly, Liz, in the last week on tariffs. What we've not done is actually also talk about the impact of national insurance tax rise, which actually has only come into effect in the last week or so. And again, for the first quarter of this year, we spent a lot of time talking about how that itself could prove a drag on growth.
Absolutely. So I talk to loads of our corporate customers up and down the country, and everybody is affected by this, and we'll have to make some changes to deal with this. And it's always a slightly different combination for every company between price rises. If you can pass the cost on, then you're going to try and do that. It's lower headcount, it's lower wages, lower bonus, it's outsourcing, it's using AI and technology. Everybody has a slightly different combination of responses, but you put them all together, and whether it's inflation or it's lower employment, neither of these things are good for the economy, unfortunately.
And Liz, I know it's a Friday morning. I'm going to put you on the spot a little bit here. What's your expectation, or HSBC's expectation, about growth for the rest of this year, given all those different factors?
Yeah, well, look, we haven't adjusted our forecast on the back of the tariff news. I think we need to wait and see exactly how things play out. It still feels very volatile. We are expecting a pickup in UK growth, and I think, we're starting to see the evidence of that in the GDP numbers this morning. However, the new news over the last week or so suggests maybe some downside risks to that. But we don't see a recession in the UK. I think we should continue to grow.
Which is very notable, because that's not the expectation for other large economies at the moment. Liz, really appreciate your time this morning. Liz Marston's there from HSBC. Thank you. Well, talking about those tariffs, China this morning has accused Washington of violating international economic trade rules and what it calls common sense. It comes as Beijing has raised tariffs on US goods to 125%. Says that the US should bear full responsibility for the serious shocks and violent turbulence facing the globe's financial markets. It comes as the market turbulence appears far from over, given the fact that many of the world's indices are down yet again today. Let's speak to Katie Martin, market columnist at the Financial Times. Katie, very good morning to you. Let's just first of all talk about China's reaction this morning. Perhaps unsurprising, but a reminder that we are now kind of fully in a trade war.
Yeah, it's really quite alarming. It's not easy to sugarcoat this. You know, what Trump did earlier this week is he took a big step back from some of the most aggressive tariffs that he was considering imposing on the rest of the world, but he really upped the ante against China. And China's not taking this lying down; it's retaliating with its own measures. So, you know, as Liz was just outlining, this is a big risk for the global economy.
A big risk for the global economy, and a big risk, obviously, because China and the US are each other's largest trading partners. But what is clear here is, Katie, that China has worked out that it's not only just prepared to have this war, but from what I've read, many in Beijing think it is a trade war they could win.
Yes, it's a real mistake to think that China is not holding any cards here. You know, yes, it exports an awful lot to the US, and this is a very big part of its economy, but it is possible for China to fight back here. One thing it could do that people in markets are very nervous about is weaken its currency really substantially. It's a very tightly controlled currency. It could weaken the renminbi if it wanted to any day now, and that would make its exports much cheaper, even despite the tariffs that have come in from the US. China also buys an awful lot of US government bonds, and I don't think the US would like to see what would happen if it stopped doing that in quite the size that it has done over the past few decades. So it's not correct to think that China has no leverage here, and investors are nervous that this could get really messy.